This advanced market structure is under what? Market structure. The market structure is under the market structure. All right. So this is the rare moves of the market. Take note of this. This is the rare moves of the market. This is how the market moves. In reality, this is how the market moves. All right. The advanced market structure, all right, also has what? 3 structures. All right. The advanced market structure also has what? 3 structures. You have the bullish market. You have the bearish market. And you have for the ranging market. The ranging market, all right? Bullish market or uptrend, bearish market or downtrend, ranging market or consolidation or what? Manipulation. All right? This is how the market moves. Good. So now I'm going to use the high and the lows to teach you for you to understand it very, very well. The highs and the lows. All right? These highs and lows also have a forward turn. These highs and the lows also have what? A forward turn. But I'm not going to use this forward turn to teach you. I want you to understand this advanced market structure very well. That's why I'm using these highs and lows without using the forward turns. All right. So with the bullish market, with the bullish market, right? This is it. With the bullish market, it first make this move. It first makes what? This moves, all right? It first makes this move. This is the move coming down, or I'll assume this as what? As a downtrend or coming what? Down, all right? So the market will first create what? A low over here and create what? A high over here. All right, concentrate on the low and the high. All right, the rare moves begins with what? With a low over here and with what? A high over here. It has a forward turn. All right, it has a forward turn, but I want you to understand it. So I'm going to use the highs and what? The lows for you to understand it very, very well. So if the market makes what? This low and creates what? This high, the market would then take out the low. All right, the market will then take out what? This low. All right, it's going to take out what? This low over here. All right, it's going to take out this low. All right, good. This is your first step. Your first step is this one. Your low, your high. The market will first create what? A low over here. Then create what? A high over here. All right. The next step is market will then pull back. All right. Market will then pull back to take out this low. Market will then pull back to take out this low. Once it takes out this low, the market will then move upwards again to take this high. This two, I'm not going to use the forest terms to teach you. All right, I'm using a simple method to teach you so you can understand it very well. Once the market have made this move to take out this low, the market then will pull back to take this high. All right, to take it out. So we have our low being taken, and we have our high also what? Being taken out here. All right, so this is your first step that you need to consider. All right, you have a low taken, right? You have a low here, you have your high here. Your low needs to be taken out first. Once it's taken out first, market will then what? make a move again upward to take what? This high over here. All right, good. So one market makes this move to take this high over here. It's going to give you what? A zone. All right, it's going to give you what? A zone, and this zone comes with what? With a bearish candle. Footnotes. All right, it comes with what? A bearish what? Candle. It comes with a bearish candle, guys. Comes with what? A bearish candle. Move. So you have our zone over here, neatly done. So you have our zone over here. So now the market will then move from this new high that has been created to take out what? This zone. All right. It needs to mitigate it. Then you move like this. All right. It moves what? In this manner. Then so we are going to buy from here. All right. But listen and listen good. Pay attention to what I'm going to teach over here. Very clear. Pay attention to what I'm going to teach over here. The market will not just come down to mitigate the zone. All right. It will fail at this point. Once it fails to mitigate the zone, the failed pullback is termed as what? Liquidity. All right. It's termed as what? Liquidity. So market will then pull back to take out what? The liquidity over here. All right. Then what? To buy. So this is how the market would move. This is how the market moves, right? Guys, I'm going all over again for you to understand it very, very well. All right. Let me go all over again for you. So this is it. In the bullish market, market will first create what? A low over here. And will create what? A high over here. All right. So we have our low over here. And we have what? Our high over there. All right. So market will then pull back from here to take out this low. All right. To then pull back to take out what? This low. At the same time, it will move back up to take out what? This high. This is your first step to move back up to take out this high like this. So now our low has been taken. Our high too has been what? Has been taken. So once the market takes out this high, we're going to create what? A zone for you over here. We're going to create a zone for you at this point. Right? It's going to create what? A zone. And I'm saying this zone comes with what? With a bearish what? Candle. It comes with a bearish what? candle. Take note. It comes with what? A bearish candle. Right? Comes with a bearish candle. Alright? Now, we have our zone over here. This time around, market needs to pull back to mitigate the zone over here. It needs to pull back and mitigate the zone over here. Then what? And buy. Alright? But market is not going to make that move. Market is not going to make that move. Alright? Market will then fail to mitigate the zone. So when market fails to mitigate the zone over here, this fail pullback that is over here is serving as what? Your liquidity. Your liquidity, alright? It's serving as what? Your liquidity. It's serving as what? Your liquidity. Serving as what? Your liquidity. Alright? Good. So once market has created this liquidity, market then will now hold back to take out what? The liquidity. The liquidity means money. Alright? Now then hold back to take out what? The liquidity. Then it will mitigate what? Our zone over there. So once it mitigates our zone over there, then you what? You enter your buy. This is a bullish market, alright? You enter what? Your buy. Alright? Good. This is the actual movement of what? The market, alright? This is how the market moves, alright? So it will continue making the same move. So market will move this way, will create a low, it creates what? A high, then it will pull back to take what? This low over here, to pull back what? To take this low over here, then pull back again to take out what? This high over here. Alright? Good. Alright, so market has taken our low over here, and at the same time has taken out what? Our high over here. So once it has taken out our high over here, it's going to create what? A zone for you. A zone over here. Alright, good. So once it has created a zone over here for you, it's going to give you what? An order block. Alright? It's what? It must be what? A bearish candle. Alright? So now, we have our low taken. We have what? Our high taken what? Taken. So we are waiting for price what? To pull back to mitigate the zone. We're waiting for price to pull back to what? To mitigate what? The zone. But now, price will fail to mitigate what? The zone and create what? A liquidity. Alright? The failed pullback is serving as what? Liquidity. It's serving as what? Liquidity. So you have your liquidity over here. So once price has given us the liquidity, price will then move back to take out this liquidity before it mitigates what? The zone. Then it moves back again. Very simple. Alright, so this is what? A bullish market. This is what? A bullish market. This is how the advanced market structure. This is how it moves in what? In the bullish market. This is the actual movement of what? The market. This is the actual movement of the market in what? In the bullish what? Market. So this is our bullish market. Alright. Now let's move on to our bearish market. Alright. Bearish market. Market will create our high. Then it will create what? Our low. Alright. So we have our high over here. We have our low over here. Price what we pull back to meet to take out this high. All right. So once price take out this high, price needs to come back to take out what? This low. So here is it. Here is it. See it? Price has taken our high. It pulls back to take what? Our low over here. Nicely. Nicely. So once it has pulled back to take out our low over here, it's going to give you what? Your zone over here. Right? Your zone over here. This time around, this zone comes with what? With a bullish candle. Comes with a bullish what? Candle. Alright? Comes with a bullish candle. Alright? Comes with what? A bullish candle. That's it. Alright? So, price needs to pull back to mitigate this zone. Price needs to pull back to mitigate what? This zone. Then what? Sell. Alright? Then sell very neatly. But price is not going to do that. Price will fail to mitigate this zone over here. Price will fail to mitigate this zone over here, creating what? A liquidity. Liquidity. Very neatly. Right? Price will fail. So the failed pullback is serving as what? Liquidity. This failed pullback, the one I'm dragging, serving as what? Liquidity. Alright? So after it has created this liquidity, price will then pull back again to take out what? The liquidity over here, then what? Sell from here. Alright? This is the actual movement of the market. Alright? So this is what? A bearish what? Trend. This is how the market moves. It moves like this. Alright? Very, very neatly. Alright? This is the actual movement of the market. Okay? It's going to create your high, your low, alright? Price needs to pull back to take out this high, alright? Pull back to take out what? This low, alright? That's it. So it has taken out our low, it has taken out our high over here. Sorry. It's going to create what? A zone. This time with what? It's a green what? Handle. Alright? So you have what? Our green what? Candle. Right now, price needs to pull back to mitigate this zone. But price will fail to mitigate what? This zone. Like this. Then it will move down this way. So the failed pullback is serving as what? Liquidity. It's serving as what? Liquidity. So you have our liquidity over here. Alright. After creating this liquidity, price will then pull back to take out this liquidity, then sell from this point. Alright. That's it. This is the actual movement of the market. Alright. This is the actual movement. The market. So here is what? It's a bearish trend. The bearish trend. This is how the market moves. Alright. Big banks trade using the advanced market structure. The easiest way, alright. You have your bearish structure. You have your bullish market over here. You have your bearish trend or bearish market. Alright. Bearish market or bearish trend. Bullish market or what? Bullish what? Trend. Alright. Uptrend. Downtrend. Alright. Uptrend. Alright. Uptrend. Right. This is your uptrend. The uptrend. And this is what? Your downtrend. Alright. This is how the market moves. So this is the advanced market structure. All right. Market structure, advanced market structure. It comes with what? Bullish, bearish, and ranging markets. You have your highs and what? The low. Thank you. You don't buy or sell in what? In the ranging what? Market. All right. The market is not buying or selling in the ranging market. It's very risky to trade in the ranging market. All right. It's very risky to trade in the ranging markets. All right. So here is serving as what? Your resistance. Here is also serving as what? Your support. Always in the ranging market or consolidation market or manipulation market, always wait for what? Breakout. All right. Your support, your resistance. All right. You wait for a breakout. You either wait for breakout out of what? The resistance zone. Right. Price needs to break out. Wait for the breakout and wait for the retest. All right. Let market to retest what? The resistance. Once it retests it, you buy from them. All right. Once it retests it, all right, you buy from there. All right. You also wait for breakout from the support. All right. Wait for it to retest the support, then you sell from there. All right. So you only sell from this retest. You only buy from what? Retest. Don't buy or sell in the ranging market. Don't do that. Don't buy or sell in the ranging market. All right. Here serve as your resistance or your rooftop. Here serves as well your support or your down. All right. Thank you.